Hi everybody, welcome to the Finance This Property That podcast. My name is Dion Fernandez and I am a mortgage planner and finance professional. My goal is to empower financial legacies for generations, and I look to do this by using my over 13 years experience in finance and having special guest speakers like financial planners, accountants, buyer's agents, family lawyers who are experts in their field to provide knowledge and free education. And without further ado, let's get into our episode today. Hey everybody, welcome to this episode of Finance This Property That. Returning guest, Luke. He's probably been on this podcast more
enough.
No, it's never enough. It's never enough. And we got special guest today, Jem, who is also, funnily enough, from Lucid Property Investments. But we're not here to talk about him being a buyer's agent or working in a buyer's agency. We're actually here today talk about a couple of things for you as a first home buyer. A couple of things that I'm seeing go on in the market, and when we get into Jem's story, you'll see why. There's a few things that I feel that are not talked about enough to try and get into the market, and it's out there. People need to make more use of it. And when we get into this podcast, we'll figure out more of that. Obviously, some of the challenges I think Jem has been facing trying to get into the property market, or and maybe that's something else that other people are doing. And Luke will also chime in there to see what he's also seeing, being in that first home buyer space. I'm not too much in the first home buyer space. All I see from my clients that are buying first homes is that they get outbid. But that's okay. Wasn't the right property.
They're not the only ones.
Yeah, they're not the only ones. Join the line. But also, I want to give you guys some options for being a first-time buyer and also other buyers. But as we know, at the end of this week, there's an election coming. And we just want to touch base and talk about a couple of the different types of policies that, the big two parties, Labor and Liberal, / the coalition, have thrown on the table. Not set in stone. They're thrown on the table as part of this election, and just talk through and see how they affect a few people. But before we get into it, Jem, welcome on the show.
Thank you for having me.
It's a lucid property day.
It is.
How you been?
Yeah, good. Just got back from Vietnam actually a few days ago, so settling back into Brisbane and on the hunt for property. Living
the life.
That's it.
Hunting a property, going to Vietnam. Hey. And also you've appeared on a few media releases.
Yeah, a few reels on Instagram. I haven't quite shared to the public yet, but I'm sure they'll be all revealed today.
Yeah, probably.
I had a line up out the front of the podcast studio asking for autographs with his recent feature in the Courier Mail.
That's it. Yeah.
What Courier Mail? Luke's done a little bit of a reel, and Jack Henderson.
Yeah, that one.
Big dog.
That one raked in a few views. But
which one, mate?
Oh well, both of them, mate. Both of them. But yeah, no, it's been a busy couple of weeks, and yeah, I guess I'm on the hunt now just to find the perfect property, and there has been a few challenges with that.
We'll get into that in a sec. Vietnam. Talk.
Interesting place.
Yeah.
Wild
I've never
place.
been, so this is me doing a bit of research, and probably Luke will probably
one of the places to go these days.
Yeah, very cheap.
Japan, I hear.
Yeah, no, it was good fun. It was the people there, the nicest people in the world, I think, and they live really simply. And some of the islands there are just beautiful. If you get out of the major cities like Ho Chi Minh and Hanoi, It changed my perspective on living, to be honest. And who knows, maybe one day I'll be living on an island in Vietnam, eating pho's and eating banh mi's every day.
Mate, there's some good banh mi spots in Brisbane, man.
There is, yeah.
But, you look, touching base on that, see how simply people live. And you can, being a first-home buyer, I think people, or, and even you, look, people trying to buy the property of their dreams way too early. They can't enjoy life. I mean, look, you're saving, you've saved. So this is what I got just out of that. You're saving for a property or saved for a property, but you also managed to save for a trip, go see a little bit of the world, get a bit of perspective about how other people live, other countries live, and know actually how good we've got it here. We take it very much for granted. It's
True.
100%.
And it's just, there's not enough gratitude going out to say, I know people hear, I don't want to buy that property. I want to buy in this and it's got to be in here. It's like, say it all the time. Can you afford? You can't afford there. How about you? We had the same conversation on this last panel. Buy where you can afford. You're a classic example of that.
Yeah.
Buy where you could afford, do little touch-ups to it, realize the equity 12, 24 months down the track, then think about what's next. And people are just like, oh, what's next, without actually letting the dust settle.
Yeah.
And there's no appreciation for it. Do you think a little bit of that?
Yeah, spot on. I think it's very humbling and probably I guess uncomfortable situation when you realise your borrowing capacity and also what the actual repayments are for your dream home. Once you realise what that is, I think you get brought back down to what's real at the moment and what's actually possible. So
and the job of a mortgage broker isn't to, what shouldn't be, it's to guide you through the process and give you the reality that you need. This is reality, and how are we going to do this safely? Because we're here to build long-term trusted relationships, put you into the right product with the right lender based on your current requirements, objectives, and think a couple of steps down the track. But our job is not to say yes. It's to lend money safely. I think ultimately. And, we had a situation recently where we had a client, I think you did I ran the numbers and I'm like, and then I gave it to you and you're like, yep. And then all of a sudden another broker's given him, I'm like, that doesn't work.
Yeah.
I know that that doesn't sit well with us at Emerge.
No, spot on.
We wouldn't do that.
Spot on.
And it's there are,
can put people in uncomfortable positions, which is not what we're about.
No.
Yeah, like you said, you want to live simply and comfortably and not be under financial pressure. Just taking a step back and realising, what you still want to be able to travel outside of paying a mortgage, though, right?
Exactly right. And I guess I'm in a fortunate situation as well, living at home with the parents, and so is the person I'm going in with, which is probably what allows us to go on trips here and there instead of putting that into a rental. But just on the point you were talking about before with, I guess, selling this dream of the other brokers saying, yeah, you can borrow this, you can borrow that, but then putting them in an uncomfortable situation. I had that experience before coming to Emerge as well. I think, a couple of brokers I spoke to were like, yeah, you can push into, 900s if you do this and do that borrowing capacity wise with another partner. And I just looked at the weekly repayments and went, hang on, can we actually afford that? I don't think we can. And then after the chat with Luke, it was clear that no, let's do this safely, conservatively, and get things right. And feel much more comfortable now.
Yeah. And you touched on one of the challenges. Borrowing capacity is a challenge right now. Getting the right advice is also a challenge. So you've actually pretty much nailed both of those. What other, tell us as a first home buyer, what are your biggest challenges and hurdles that you've sort of faced?
Well, I guess initially and this was mentioned on the reels with Henderson and whatnot, and I had, even in the Courier Mail, I had a chat to Nicholas Finch about units versus houses. As a independent buyer, I'd be able to get into a unit in Brisbane and in an area that I would want to live in. But I see further beyond just getting into the market and just buying something to live in right now. Because if you compare, and anyone can do this, if you compare the growth rates of units to houses on a decent block of land, even 20, 30 kilometers out of the CBD, over, 5, 10 years, you're going to well surpass the growth of a unit in a city or just in the outer suburbs where we might be working, like Ashgrove or Windsor or wherever it might be. The data's out there, and so that's why I guess I partnered with my friend to increase the borrowing capacity to be able to buy a better asset, and then down the track turn that into an investment and rent instead of buying a unit to live in. So then we have more flexibility and freedom with where we want to live, but we've got an asset there that's working for us, and not detrimenting us in the long term.
Yeah.
And mate, you'd be like 1% of first home buyers that think like that. Guarantee you. You're all institutionalized, I feel, by what our parents did. Buy the first home, you got to buy where you got to live in it, and you got to buy that home, and you got to buy. Gone are the days. You don't need, you've got to have a plan. And that's what I talked to Chris about, coming to a buy. Like, you want to build a portfolio, or you want to build, you've got to have a plan. Like, you're not going to live in that. Even if you buy that property, that's never going to be your first. Stats to show you're never going to live in that. It's going to be the first property. You probably move house 3 times, buy 3 times before you settle in the right property. Hell, I've bought 3 times, and I've actually now moved out of that property, renting it out, now renting where I want to live, because it's a hell of a lot cheaper than buying the property where you want to live.
Yeah. Becoming a lot more popular these days to go down that path. Yeah, but I like what Jem's done here. He's gone for the long-term view, and I think like delayed gratification in terms of you'll reap the rewards later on down the track, in my opinion.
How old are you, if you don't mind me asking?
23.
23.
Yeah.
So you've got 45 years.
Yeah.
You got to put it into perspective.
Yeah.
You're not playing the short game. You're 45 years, but you got to get into the market.
Yeah.
You wait till I get a 20% deposit, you've missed out.
Yeah.
Because so based on that, you've touched on, you're going to go buy with a friend. That's one of the new rules that have come out, right? So talk us through that, Luke.
Yeah, I'm sure Jem doesn't mind me sharing this. It's in the Courier Mail anyway.
And Henderson's
yeah.
So, mate, he's got
the list goes on.
Jem and a friend are utilising the first home guarantee scheme. So under the first home guarantee scheme, you can buy as a single, a couple, buy with family, and buy with friends. So that's what Jem and Tom are doing. Shout out to Tom. So they're utilising that, buying up to 700,000. Jem come to me to see if he could buy on his own. Realised borrowing capacity wasn't at a level where you could buy an asset that you're after, essentially. So he's teamed up with Tom, and they're out there shopping and can hopefully take advantage of something soon.
Yeah, so that's what you don't pay the LMI.
Yep.
So you can get in with a smaller deposit.
Save about 25 to 30K in LMI.
Yep. Then you save on the stamp duty.
Yep. 17,350. Yep.
So that's 25 plus 17, 42 grand. And you basically have to come up with a 5% deposit between the two of you.
Yeah. So roughly 30 to 35 grand is probably what the range will be of the deposit.
Yeah. Which is 5% of 700,000.
Yeah. Plus your costs, about 6 grand or so.
So basically 17,000 and 17.5 each.
Essentially.
Let's call it
more.
Let's call it 20. 20 each, because you got to pay the extra costs. And you're in on a property, and with a property with a view to grow over time.
Yeah.
You'll live in it, and then you can figure out what you want to do next.
Yeah.
Yep. And there's different ways to set that debt structure up. There's different banks that do wonderful thing, property share.
Yeah.
So
which we've got a plan, don't we?
Yeah. So I guess when we had the meeting with Luke, he identified the property share aspect, which down the track CBA allow you to separate the loan and essentially have 2 separate loans, which then if Tom wanted to pull out equity to buy something else, or if I wanted to pull out equity to buy something else, that's possible, which is great, because if you're
not liable for the full debt.
If you're if living circumstances are different, then that's great, because we can go in separate directions. So I'm stoked when that comes around to utilize it.
So the property share basically is actually a great tool to reduce your actual outgoings, because then you're actually individually paying for each loan. So whereas if you went to most other banks, you'd both be on the loan, you'd be joint and severally liable for the full amount. When you go borrow again, you still have that debt. Yeah, there's other things like common debt reducers, etc., that you can use. But I like the property share scenario, because basically you're just guaranteeing each other's loans, and you're actually protecting your borrowing capacity for further down the track. Now, if you want to go and take equity out, you just can't take the equity out without the other person saying, signing off on it and vice versa. So it actually really protects both your best interests at heart, and it's clean.
Yeah.
You go pay that. It won't appear on his loan, won't appear on your net banking. Your loan won't appear on his net banking.
Exactly.
But you can also request statements and stuff like that from each other being a guarantor. There's right of access to that to make sure that you're actually making the payments. But I think it's good.
Yeah.
I think good option.
And it's only going to become more common, I think, in the future. I'm seeing a lot of it at the moment. I've got two on my desk right now in that same property share scenario. So,
but it's only one other bank that does it. There's only two banks that do it in Australia, which I feel it works. It's not. It's just not enough because it's just yeah. I think it's pretty. I think we should be able to do that more often, especially getting into the first home buyers part where you can use the scheme. So the scheme lenders should think about offering something like that.
Yeah. So that's important to note. Under the scheme, you can't do property share with either of those two lenders. And I think it's also important just to highlight speaking to a solicitor as well, and perhaps getting some legal things put in place potentially. At least having a conversation with them before you go into this type of arrangement, just to make sure that everyone's protected. You're on the same page.
Yeah. That's good. Good options to have, eh?
Yeah.
It's as Luke was just touching on there, you can't get into the property share until the LVR is at 80%. Is that correct?
Yeah.
So I guess if you want to delve into it a little bit about Tom and I's trajectory of purchase, our plan is to hop on to a property in wherever it might be, south of Brisbane, Logan sort of area, at the 5% deposit, renovate, bit of sweat equity, try and get that up to closer towards the 20% mark, however long that might take, 6 to 12 months, turn it to an investment property, and then either go live back at home or rent if we have the option to at the time, and let that do the work, and then have the property share to go either way.
Yeah, once you get it to that 80%. Yeah, so it's a bit of a long-term mortgage planning that you have to do around debt structure. So get in, make sure you meet the rules to save $42,000, tick that box. Make sure you're both on the page, get the legal advice. Once you're 12, 18 months down the track, realise the value, split, change, restructure the debt, property share.
Happy
Move
days.
on, happy days.
That's it.
No issues.
Yeah.
That's a good plan.
Yeah.
And again, you'll be talking to Luke as your mortgage broker to make sure that it is all working.
We do our reviews every 6 months,
6,
which
12
you know
months
about.
anyway, man. So it won't be a problem to go, and you just have to keep making money.
That's
because you can't lend unless you have money or equity, right?
Of course, that's the major issue. Yeah. That's life.
But I think that's a good option. There's these little things that you can have a look at. People, you're just going to a bank, and a bank will just give you their policy.
Yeah.
Think outside the box. I think this is where a broker comes in handy, because it's not one policy. There's how many banks are on the scheme at the moment? There's 10, 12?
Probably like 6 or 7 that I've got on my radar.
Yeah, that you use frequently. There are a few
Yep.
more, but we don't really use them too
Yep.
often. But out of the good ones, then you plan it out. Like, what is the long-term plan of this property, etc. So
Yeah. Go slow to go fast.
yeah, that's it. I haven't said it all day. Yeah. So what other challenges have you been facing?
I guess apart from saving the initial deposit, which wasn't a major challenge, but it was one of the challenges. Available properties is the next challenge, and I guess I'm fortunate again in that sense that to work with Chris in the space that we're in, we've probably got an advantage, or we definitely do have an advantage over most first home buyers, where we get sent 20 to 30 off market properties a week. And then I just pick the best one when it comes along and go, okay, let's go for that one. It works because of this development potential that you can realize in this many years, et cetera, et cetera. But for Tom and I's specific purchase, because the market is moving pretty fast in the areas that we're looking in, and we're aware of that, we've got another sort of different approach where I've got this large data set of properties across the areas that we're looking in, and the phone numbers of all the owners next to it, which will then pass on to an agent and go, can you please contact these properties? They work because of these reasons. If you can find one of these up to 700,000, then we'll buy it. And he's got certainty that he can go and approach those buyers or the sellers and know that he's going to have a buyer there ready for him because we've already done the research and we've given him the file to run with. So I guess to any other first home buyers, yeah, finding available properties and trying to outbid regular buyers it'd have to be a challenge that you see every day.
Yeah, spot on. Yeah, there's so much competition out there in the open market, so you've definitely got the upper hand.
Yeah.
Like, it's a very fortunate position to be in. Yeah, so in the open market, a lot of the clients that I'm working with, yeah, they're just getting outbidded, and it's a big challenge. I feel like I do a lot more, I guess, coaching, talking to my clients and telling them and guiding them on what to look out for, how I would value a property and what I would be asking the agents, and almost sort of like quarter buyer's agent type sort of,
There you go.
We'll
have to sign
which
you.
is great. And I don't mind doing it because I care.
Yeah.
And I'm very passionate about what I do. So, but a lot of the open market need the help.
Yeah. But also, I think your First Home Buyers Club Queensland Facebook site as well helps that. Some people not confident to actually come and have a chat. Well, they can go and read all that information. We've got Jess coming up, who's a big part of that group as well.
Yeah.
Talking through a few tactics and tips as well. But you've got to educate yourself too.
Yeah.
You're being outbid because I think you're not organised enough.
Yeah.
You don't know your borrowing capacity. You're getting a pre-approval. Yeah. Neither here nor there.
Yeah.
You need to understand what you can actually borrow, and you don't even have the deposit saved. So don't start if you don't have the deposit saved, or don't know how to get the deposit saved. You haven't talked through to a broker about what your borrowing options are.
Yeah. What incentives you're eligible for.
Yep. What's the point in even going out there and trying to find a property?
Yeah. Yeah.
Get organised.
Yeah. There's a lot of things outside their control too.
Yes.
Prices moving so quickly, particularly in certain segments of the market. We've seen townhouses grow exponentially, townhouses in units in the close city ring sort of area, and it's hard to value what they're worth any given day, like, because it can change from week to week or month to month in that space. And would you agree?
Yeah, I mean, inner city units, and this is from, I guess, family's perspective as well. They've bought a couple in the last sort of 2 years in Kangaroo Point, just one bedders, and I think they've created equity of over 300,000 in the span of, like, I think the last purchase was in May last year, and there were just these small one bedders in Kangaroo Point that for some reason the market wasn't aware of or wasn't clocking onto the fact that they might hold some form of value in the next few years.
Yeah.
And then bang, off it went. So definitely not writing off units, but if you can afford a house with a partner, it's definitely worth exploring that.
Yeah.
I think it's key that you need to look at the options, that you don't know what you don't know.
Yeah.
What do you?
A lot of first home buyers are worried about paying too much. I often use my example when we bought our place. Like, it was meant to go to auction, and like, we were just sick of looking. It was in an area where we're really happy with, close to where I play footy, and again, like,
It's
it
right
was
next door. You back onto the footy. I don't think you get any
Major
closer.
decision.
Don't know how I got away with that, but anyway, we're in there now. And yeah, I'm very simple. We're happy with it. We didn't need to buy our dream home straight off the bat, but I was sick of looking, and so I probably offered 20, 30K, maybe over what it was actually worth at the time, but that was enough to secure it. And when we were out of the market, we weren't shopping every weekend anymore, and that 30K is irrelevant now. It's only been 12, 18 months.
Yeah.
Exactly.
You've done a bit of work to that property as well to get it up there. Like, you sweat equity, as you say, but you buy what you could afford at the time.
Yeah.
And just live in it and hold it. Let it do it. Let time do its thing. As Chris just said in the previous podcast, let time do its thing. And that's, there's a lot of stuff that is completely out of your control.
Yeah.
But what is in your control is get organised get your deposit sorted, get your options going, be in a place where you are actually able to make an offer. And even if you have to go 20, 30 above, be able to go 20, 30 above with confidence and just go, get off the market. Because it's time in the market versus timing the market.
Yeah.
We say that all the time.
Yeah. You wait another month and you're going to pay that 20 or 30K anyway.
Yeah.
That's it.
And you wait 12 months, you're out of it. You can't buy that property.
Yeah.
So
You're
wouldn't
then
you
out
rather-
to the next suburb.
Yeah, and you back out. You go out further. So there is, there is a big disparity in that. And also, we'll talk about it in a sec. I mean, I personally don't think the numbers align for the schemes in certain places.
Yeah.
It's a bit of a disparity.
Yeah.
And we'll talk about it in a sec.
Yeah.
But there's a massive disparity. But first home buyers, tell me like 750,000. Mate, like that's not even the median house price at the moment.
Yeah. And that's why I guess, people are buying more townhouses and units because that's all they can afford. And also the scheme caps limit them.
Yeah. But even townhouses and units, they're cotton onto it. It just, it's just driving people further and further out or further, like not being able to buy where they want to.
Yeah.
Well, just touching on that point there, actually, with the scheme being at 700,000 right now for the 5% deposit, no LMI and no stamp duty, it's as a single person, obviously borderline impossible to do that under the scheme. But even as partners, like to make that move to wherever that location might be, whether it's for a Southeast Queensland perspective, Caboolture or the far south of Logan, to do that, you're actually affecting your whole lifestyle as well. So the commute to work or wherever, you might not be able to play for the same football club anymore, as you were saying. It changes your whole perspective. And I talked about it a little bit in the Courier Mail, but it does change your whole life buying that one property, even if it's for the 12 months that you can get in and get out. Definitely something to think about. And I understand why people are now looking at townhouses and units. And I'm obviously in a fortunate situation to be able to look at houses and know my strategy because of the, information that I have at my disposal. But I do understand why they're doing that because it is a massive commitment to go there.
Yeah.
And also your friendship circle.
Yeah.
You're more isolated
Of course.
outside of your friendship circle. I
Yeah.
think, we talk about mental health being key. It's like, well, how much do you really want to sacrifice all of that? And you've got to make a decision. And you have to make that knowing that there's going to be some hurt.
Yeah. Yeah. You got to choose your hard.
Yeah, choose your hard. And it's a choice.
Yeah.
You can, but you can't complain about not being able to get into the property market because you can.
You can.
You just have to make the choice and make some sacrifices to do so.
Yeah.
Yeah.
So it's tough, and we're not. We hear it all the time. It's heartbreaking. But that's a very unspoken challenge. It's not a challenge to buy the property or to save. It's actually the challenge once you buy the property, how your lifestyle changes, how you adapt.
And
How do you guys think you'd go?
That's a good question. I have thought about it obviously in
A
depth.
few nice restaurants out
Yeah,
there.
no,
Yeah,
no
the
restaurants
Pies is
out there.
close.
No coffee shops. Yeah, that's true. But
Yeah.
I guess why I brought the point up was because I see my mates and my mates' mates making the decision of units, townhouses over houses in these areas purely because maybe they'll be with their girlfriend and they'll want to buy in this nicer area, or their family might be in this area, so they want to keep within that sort of 3 or 4 suburb region. And I completely understand it, and I can't I'll try and help them, but I can't question their thought processes because that's what they want to do. I'll educate them on why it'll be better in the long term, but if they see the numbers and still make the decision, then it's out of my control. Like I couldn't do anything. But going back to your question, sorry, you'll have to ask that again because it's just left my mind.
What was the
I
question?
think there's a lot of
There's more like,
societal
how do you-
pressures.
Yeah.
There's a lot of societal pressures.
Yeah.
I'd say, how are you going to cope with it if
How
you do
are you going to
that?
cope? Well,
Yeah,
for
what do you
me
feel about
personally, like life will completely change because, as you mentioned before, the friendship groups that don't exist in the areas that we're looking for, or it's going to be an hour commute to go and meet up with mates or family. I guess sport-wise, I'll have to find another football club to play for in that region.
Might be better than the one you're in at the moment, though.
Who knows?
Could be a silver lining.
Hey.
Yeah, no, top of the table at the moment, so I can't complain.
Oh,
But no, it's
Might be benched after that comment, just quietly.
Oh dear. No, there's definitely some things to think about, and we have thought about it, and I guess that's why we've accepted that the 6 to 12 months of our life for the 43 years that you talked about before isn't much.
No.
So
got to put it in perspective.
yeah.
Yeah, you gotta have. There's gonna be some hurt. I just got to, yeah, like you said, choose your hard. Yeah, the other. I mean, look, then the other option is don't buy your first home, just buy a rental property. You just need more deposit. It's just more to get into the market, but you can still do it. You forego all the
incentives
and things like that. But there's another way. But then you get to have almost the best of both worlds. But the hurt then comes in the form of you need more deposit.
Yeah. Another, what I'm seeing work really well is rent vesting, but with the help of guarantor.
Yes.
So you don't need, have some cash up your sleeve to put down as a deposit, but you don't really need much cash at all.
No, but you do need the serviceability.
Yeah.
And if you don't have, again, there's a lot of pieces, but yes, it's another option. There are banks that are doing investment guarantors.
Yep.
As long as it makes sense. And we're not putting the guarantors at risk. It's a conversation that you can have. That way you can live where you want to, or rent or live where you want to be, but have that investment property, no emotion attached to it, liquor paint, do it up, build the rent up, and then let time do its thing.
I'm sure you have those conversations all the time with first home buyers if the option is there to go guarantor and rent vest.
Yeah.
And then for them to live in a rental somewhere that they want to live, that's a better option, right?
Yeah. Well, it can be if it means they get into the market versus not.
Yeah.
So first point of call, like we try and get access to all the incentives if we can, because once you've bought, you don't get it anymore. Then if that doesn't line up, you can't afford to buy something where you want to live, well, then we're looking at rent vesting. And, can mum and dad help by going back guarantor? It doesn't need to be mum or dad, close family, but that's essentially how it flows. Yeah.
So let's do a little quick example. So I've just gone out rent vested to buy where I'm living now. I'd have to, let's call it, pay the price of that plus the stamp duties. Worked out the repayments to be astronomical. Like something.
What's the difference?
It was $8,700 a month, and I don't pay that. I pay like less than half of that. Right?
Wow.
But then I've rented my place out. It's just, and then getting the tax post-tax. And Jack Henderson talks about this all the time. If you can do it, do it. Because it's building up equity. I've got equity in my property. All the repayments are made with pre-tax dollars.
Yeah.
And you don't have all the other overheads that come with owning an owner-occupied property.
Yeah.
Because it's all, owner-occupied property is all paid with post-tax dollars.
And because you've lived in that property.
Correct.
Yes.
There is some capital gains. Well, hopefully, let's just see if that still goes. But
who gets it.
We'll get into that in a sec. But there's some incentives where I've lived in that property, or lived in it for 12 years. So I've got maybe 6 years where if I can do this thing for 5 to 6 years. If it's not working, I can go sell that property, and there's potentially no capital gains implications for me because I've actually lived in that property. I could go back there after 5 years, live in it for 12 months, and it would potentially start again. Now, who knows whether that's going to be like that in the future? But currently, that's the policies at the moment. So
it's always important to check with your accountant before you make those moves.
100%. And I did a lot of that, accountant, financial planner, because it all has to line up. We talk about having long-term goals. Well, my accountant is probably, because being self-employed is, that's the person I need to run pretty much all the decisions through, and then financial planner to make sure that it all matches and forecast forecast everything as well, because they all talk to each other. But yeah, there's another option as well. But I could, even one of my other clients wants to buy a property. They're looking at $805,000 for a one bedder in Brunswick Heads.
Wow.
They just needed to get in, and I've just said, guys, where are you now? I go, do you want to live where you are now? I said, how much does the property cost where you live now? And they go, about 1.4 million. And I said, well, 1.4 million plus your stamp duty, you'd be paying this much in repayments if you bought that property. You go buy a investment property, you've already got the 10% plus cost deposits anyway. Buy that, live where you want to live, because you don't really want to move, because you just want to buy in the next suburb anyway. But why would you pay $800,000 for a one bedroom apartment? Again,
I would get some
it does my head in. And it actually went for So anyway, but I said, I ran the numbers, and they go, oh, it makes no sense, does it? Okay, no, it doesn't.
Yeah,
it makes no sense. How much? And they're not even paying. They're paying rent equivalent to like a 2%, 2.5% yield. Because it's worth 1.4 mil, 2.5. I said, yeah, but then you're paying interest at 5.94. Actually, probably, 5.94 if you get it at 80%. So
think outside the box.
Yeah, okay, just get into the market. I think now they realise that might be a case. I mean, it's just a conversation. And again,
you don't know what you don't know.
No. And the funny thing was we thought we could get the scheme, but the scheme's got different. I get the stamp duty waiver.
Yeah, regional area.
Regional, and when we punched it in, it was something. Yeah, that was under. I think it was 700 or 7. Or anyway, it wasn't enough to get the LMI waiver. I'm going, man, this is Brunswick. It's not. Yeah, it's Northern New South Wales. It's not really technically. I don't know. People still class that as region, but anyway. Look, I mean, I think the next hot topic is obviously the election. Now, we're not giving any political viewpoints, just giving you some facts.
Pretty excited for the sausage sizzle, just quietly on Saturday.
I hope is it free? Do you get it for free?
Usually is.
Yeah. Hopefully they put onions in it.
Mustard or tomato sauce?
Both.
Both, yeah.
Combo.
Tomato sauce only for me, no mustard.
A bit of both. Bit of flavour.
You can't mix and match.
Yeah, you
can. Too outrageous.
Yeah. So, look, the two major parties have released a couple of different potential, because it hasn't been passed in, changes or ideas they'd like to float based on this election. And we'll go through a couple of them. So Labor, looking at, 100,000 more affordable houses for first home buyers, being very specific, looking at potentially a shared equity scheme. What that looks like, very vague at the moment. First home guarantee scheme, not having an income cap, which not bad. Because let's face it, to buy and borrowing, we just talked about borrowing power being an issue. They're capping that too, so you want to be able to get in the market. Looking at deploying about $1 billion for the housing crisis, and also looking at some more funding around modular housing, which is there's a few banks that have come up with some pretty cool policies. So let's just unpack a bit of Labor. Thoughts? Yeah,
I'm excited to see the price caps lift for the first home guarantee. So that's the main thing I took out of it was, so the price cap for Brisbane, Sunshine Coast, Gold Coast would be 1 mil.
Is that with both parties? Or both parties have agreed on that. Yeah, great. Yep. Well, that's relief.
Yeah, correct. Yep. And no income cap's going to help first home buyers get up to 1 mil.
Pause. Wait 1 sec.
Yeah.
Oh, here we go. Start again.
That's still on.
Yeah, no, it just turned off and then restarted.
All of them?
Nah, I think just
this one and this one.
Okay.
Do you remember where you're up to?
Labor.
Yeah, I'll just go back and say we'll just go back to, because I've already done the modular funding thing.
Yeah, you can kick up. That one's back. I don't know what.
Keep going. Yeah, cool. So, you know, based on what we've just talked about, what are you most excited, or give us a little bit more insight as to what you feel with Labor?
Yeah, what I'm most excited about it is the can we go again?
Yeah. Nah, just keep going. Yeah. Okay, now we'll start again.
Yeah. So
I'll just do that clap to cut out. Cool. So based on that, there's a few policies as well. I think both parties are thinking about lifting the cap, you know, on what is it? The
first home guarantee.
First home guarantee. Yeah. Talk us through about what you think the strong points of Labor are, and the first home guarantee scheme.
That's the thing I took out of it the most, was that the first home guarantee price cap for buying in Brisbane, Sunshine Coast, Gold Coast is going to be lifted to $1 million.
Yeah.
And so to be able to borrow to buy a property up to $1 million, you got to have some decent income under your belt, right?
Yeah.
So they're actually getting rid of the income cap as well, which is great. So it's one thing increasing the price caps, but if your income's not up to the level to borrow it, then that's no good, right?
Yeah.
So
that makes no sense.
Look, it's not going to. Not everyone's going to be able to buy up to $1 million. It's going to help a very small segment of the market, but it opens up more doors. So I think that's a great change and something that was well overdue.
Oh, it's something that they both agreed on.
Yeah.
Doesn't really happen all that often.
I was worried that the first home guarantee may not be continued, but it's good news.
Yeah. I think those are the two key things that I also took out of it. Shared equity scheme, like what are your initial? I don't think there's anything a lot being released too much
I believe
about
a couple of state governments have actually introduced that already. Queensland hasn't, but I'm not too excited by it, to be honest. Like if the government's got some equity in your property, not something I would personally be too excited by. I'd be leaning towards the first home guarantee because then, you're not sharing your equity with the government. When you sell your property, you got to pay the government out or any of those sort of things.
Still comes at a cost. And I think when, it's hard enough to refinance if you're on the scheme. As it is, it's hard enough to do that. You literally have to go leave, you can't just change things very easily.
If it means you get into the property market, well, then you consider it, right?
Yeah. I think it's got to get your options is basically what you're saying.
Yeah, correct. Yeah.
Modular housing, seeing a lot of it?
Not in my world.
No. Neither
Yours?
am I. No, not so much. That it's. I think it's got its place, and I'm glad to see some lenders have actually changed their tune on modular housing because it is quite affordable. It's the fact that it comes prefabricated and it doesn't have construction stages, so it was really hard to lend. There are a couple of lenders that will lend to that up to a certain value, I think 50%, there's a few.
They've all got their own intricacies.
They've all got their little intricacies about what they do, but there are lenders that'll do it. It's another option. Save costs, etc. So, but they still have to be up to a standard. So so there's again speak to your broker. About it, because there's a couple of lenders that do it and they don't do it too badly. Cool. Liberal. Anything else to cover on with Labor?
No, obviously they're going to dedicate a certain amount of money towards buying homes or building homes for first home buyers. Not sure how that will play out and what that'll look like, but we'll wait and see.
I guess from a personal perspective, I've actually previously put Luke in touch with a mate of mine that probably fits into that bracket of couldn't quite get on the scheme because of maybe income, but now under Labor potentially can. I think that up to 1 million will definitely, and even potentially in Tom and I's situation, worst case scenario, if we weren't able to buy something within, I don't know, the next year, not saying that will happen, but if they can bump that to 1 million then and our income increased at the same time, then potentially that could help us as well. Yeah,
it pivots a lot of conversations where some people might have rent invested, but now they might actually buy to live in.
It opens up more opportunity.
I
feel. Okay. And it doesn't feel so far out of reach.
A lot of positives to it.
Yeah, 100%. Cool. Liberal. So a couple of interesting ones I feel here, but pretty cool. Looking at tax deductibility on the home loans for new builds only. And the idea of using your super fund, maybe up to 50K. That idea has been floated for a very long time. I've heard it with different at different points in time, and also looking at the serviceability buffer, like lowering that down. Again, that's also been spoken about. There's been a conversation had with ASIC Napa around it, and they've just flat out said, no, we're leaving them as it is. And really the banks have to be guided by that. You don't want to get on their radar. So 3 points there. Your thoughts, guys?
Well, actually, that was, I guess, a bit of a main point in the Courier Mail article. Nick was talking to me about the serviceability buffer that at the time I didn't really have too much of an idea around, but now it makes a lot of sense where if they were to drop that, borrowing capacity increases, more areas you can look into, and I guess could benefit, home buyers massively.
Yeah. Yep. So for those that don't know the serviceability buffer, so the bank gives you the money at, say, 6%, call it, but they're actually servicing, like for your borrowing capacity, another 3% on top.
Yep.
So essentially servicing the repayments at 9%. So they want to make sure that, if interest rates increase, you're still going to be able to make your repayments. It's good comfort for both people, like both parties, right?
Yeah, well, the banks are assessing risk and propensity to repay your home loan, but also should the rates go back to historical rates where they were like 9, 15, 17%. I mean, I
hope not.
You'd like to hope that the government actually knows what they're doing with money, and we don't get back there. I think a few people are freaking out getting to 6%, but quite honestly, sitting anywhere between 4 and 5% as your rate is actually quite normal. The 2% rates, that's not normal. But people normalized it in their heads, thinking that's the, and then they didn't adjust accordingly when it did go up. Because it's not going to ever stay like that forever. It's going to go peaks and troughs. Serviceability buffer. Look, whether it happens or not, it's organically, it's happening, but not happening with the 3%, 2%. Because as rates drop, when the interest rate drops, so let's say the base rate went from 614. And now it's like, 25 basis points down. The 3% buffer, the 3% we call it assessment rate gets added on top of the base rate that you're paying. So it technically has gone down. You're not servicing it at 9%, you're servicing it at 0.25 less. So it has technically gone down. But it's that 3 to 2.5. I think that'll be pretty tough to get through.
It's one thing saying it and announcing it.
I mean, because we've had
trying to gather some more votes, but then one thing actually going through.
It makes sense. It does make sense, and don't get me wrong, I'd love it for it to go down. But they've floated the idea already, and they've said no. But maybe, I don't know, someone's got a way, and hopefully, I mean, it'll make a big difference. It will. 0.5% to 1% will make a big difference because you can still adjust the serviceability buffer anyway, because they put it up. It used to be 2.5% anyway, and they put it up to 3%. So maybe just I think there's a good case for it, given that things going backwards.
Yeah. Well, what did NAB announce yesterday? They think there may be 1.5% cash rate decrease over the next 12 months or something like that. So that's going to make a big difference. And if Liberal get in and they lower the serviceability buffer, it's going to be a big change.
We're losing almost, well, if it's from 3 to 2.5, there's 0.5%, and we've dropped 1.5%. So really, we've knocked off 2%. Really, it's cool. What are your thoughts on any final thoughts on that?
Not on the serviceability buffer. No.
I think it's going to be interesting. There'll be changes for whoever wins on the weekend. I think you need to do what's best for you. In your situation.
Yeah, it's good to see both Liberal and Labor continue the first home guarantee. There's Liberal do have the income caps, so I believe it's 175 for a single applicant and 250 for a couple, which is that's pretty achievable, I would have thought. Don't often see too many single applicants under 175 first home buyers. So
It's the couples I worry about. They're on pretty professionals, pretty decent income.
Yeah.
I'm sure there's, you've got to do the notice of assessment period as well, which kind of helps. But those are the ones I worry about, where there's two of them, they're on good income, they're professionals.
Yeah.
They just it kicks them out slightly. But then the flip side of that is, well, you've also earning more money, therefore you should be able to save it and not rely on on the scheme to
Exactly.
Yeah, but if it's there, well, why can't I use it? If you're Australian, it's
permanent resident or Kiwi
or a
coming
Kiwi.
over. Yep.
Hey, you've said it, you've given it. It's not, then you're not doing anything wrong.
Yeah.
So why shouldn't you? So I get it. Totally. It's just, we don't want to hopefully throw everyone out. But 175 for an individual,
seems achievable, doesn't it?
There's not a lot.
50K increase from the last, right? Yeah.
Yeah.
But there's no increase on the couple, is there? Was it?
Yeah, 50K.
50K. Or was it 200?
It was 200, yeah.
Okay. Oh, man, that's not even. That's like almost what average income's 90,000. So that's between two of you, that's almost 200 anyway.
Yeah.
And if you go debt to income ratio, 5 times debt to income ratio on 200, you could easily afford an $800,000 loan between you. I mean, not taking into consideration anything else. So good moves.
Yeah.
I think, I think the one that they say, the good thing to come out of it, they're both parties are for first home buyers. They're in their own way.
They recognise the issues for first home buyers.
Yes.
That's clear. They've highlighted that there is an issue there to trying to help get more people into the markets. That I guess they're trying to help. Well, I do worry about the prices though. To be honest, I don't really know the solution. But if I was a first home buyer listening right now, I'd be getting my ducks in a row and trying to take advantage of these incentives over the next couple of years.
Before everyone else does. Yeah.
Yeah.
And we've been saying it from that very first episode. It's get organised. Get organised, get your right team behind you. Don't get a bunch of yes people. Get people that are going to challenge your way of thinking and give you options.
And I guess that's what I try to instill in some of my mates that might have differing ideas of, I don't know, what their life they want it to look like, but maybe traveling overseas or renting here or whatever. I try and educate them and go, okay, get organized right now. If you can buy, figure out what your capacity might be. If it is with a partner, what that might be. And there's still a potential where you can buy this thing, whatever it is the asset might be, hold it and do the things that you want to do. But get educated first and get organized. Don't just write it off. Because I think, and you would have these conversations every day, a lot of first home buyers, probably 95% of them, have no clue of what they're possible of doing or what they can do. And I think they might, in their head, overcomplicate it as well. It's definitely sacrifices to be made, but not outrageous.
Yeah.
I mean, that sacrifices to be made. Live simply.
Exactly.
If you wanna get a reality check, go to somewhere like Vietnam and see how simple life is. Don't have to make it complicated, but they have to sacrifice a lot.
Yeah.
I think like I said, we got it pretty good here. So hopefully, people listen to this podcast and get something out of it, get a different perspective. The one thing I will say is that obviously the information on this podcast is general in nature. It doesn't take into consideration your current situation. We've talked about Jem and his Jem and Tom, mates that are buying together. So they're two different situations that we've found a solution that works for both. We're not giving any political advice either. We're not trying to sway your votes. You will vote how you want to vote. But if you did find this useful or someone in the same situation, I encourage you to share this podcast. It's free. It doesn't cost you anything. Follow along. I'm at Dion Finance Specialist and at Finances Property, that podcast. We're on the normal streaming networks, Apple, Spotify. If you want to look at our pretty faces, it's on YouTube. this is going to be released before the election comes anyway, which is great. But yeah, Luke, how do we get a hold of you? Someone wants to have a chat with you about the options for first home buying.
Yeah, I'm on all your social media channels, TikTok, Facebook, Insta. Also got the First Home Buyers Club, which I'll give a plug. It's First Home Buyers Club Queensland.
Yep.
So in there, it's a free educational platform. Get in there, get the information that you need to make better informed decisions. There's people that I know, like trust, that are involved in property, like sales agents, buyers agents, mortgage brokers. You can get ask any questions that you need. They can be anonymous, so there's no pressure.
Yeah.
So jump on there, and if you want to have a chat and dive into it further, which I recommend, if you got any inkling that you want to buy a property, go and have a chat with a mortgage broker. It doesn't need to be me, but you'll be able to find my link to a calendar and have a chat and see what options are available.
Exactly, cost you nothing.
Yeah.
Yep. Jem, we can see your face on the courier mail.
You can.
A couple of reels.
Yeah.
But people want to get a hold of you and talk to you about your story directly. How do we do that?
I guess LinkedIn, or you can go to lucidpi.com and go through Chris and I if you're interested in having a chat about property investment. But directly, LinkedIn's probably the best place to find me at the moment. I'll have to launch some socials like
You
Luke
might
over
need
here.
to, mate. You might need to. I think it'd be great to map your journey.
Yeah.
I think it'd actually be quite a great, good for you as well to have a bit of social proof, basically. I seriously consider doing that. That'd be a great sort of thing. You can use this podcast as a launch pad. Obviously, your courier mail and your reels, you can use that. So it'd be great social proof.
Yeah.
Yeah.
I think, to prove that, hey, you can make sacrifices, you can do it. There's a solution. You just got to be willing to put in the hard work to do it.
Yeah.
Cool. Well, we better wrap up things there. Thank you guys for making the time to come out.
Thanks for
Thanks for
having
having us.
No worries. Thanks for sharing your story. As always, man, thanks for coming on. I think these podcasts, I think a lot of people get, of the first home buyers, do get a little bit out of it, quite a lot out of it. And it's something I don't normally talk about, so it's good.
Yeah.
It's
Happy
good
anytime, mate.
Yeah, it's good to have you on the team, because if I can't help, there's someone here that actually can. As always, stay safe and see you on the next episode.